Hi, my name is Hillary Sunderland, and I'm the Chief Investment Officer of Beacon Wealth Consultants. And this is your November 2020 Market Update. Well, as I was putting this presentation together on Giving Tuesday and reflecting on the challenge that 2020 has been for so many people, I thought it would be very appropriate to do something a little different this month. And instead of focusing solely on the markets and the economy, I thought it would be nice to start by telling you about some of the positive things that have been going on behind the scenes in the companies in which you invest. Over the last few weeks, I've read some corporate responsibility reports and found many of them to be encouraging. Corporations exert substantial influence over every aspect of society, and investing responsibly allows us to address critical issues that matter to businesses, to shareholders, and to society as a whole. So I wanted to start by really showing you some of the ways your investments have had a positive impact in communities around the world by investing responsibly through Beacon Wealth. And one of the things that has been a concern for us and some of the companies in which we invest have been working to address are human rights concerns. So global corporations often do business in countries lacking adequate legal or regulatory structures that protect workers, consumers, communities, and the environment, or where lax enforcement renders existing laws ineffective. And such activity is not always exploitative, but it can be. The adverse publicity associated with allegations of sweatshop practices or other human rights abuses can also pose substantial brand or reputational risk for companies. And you may have seen in the news just this week, the U.S. Supreme Court considered whether two major corporations can be held responsible for forced child labor on cocoa farms in the Ivory Coast. The lawsuit was filed in 2005 by 6 individuals who say they were trafficked as children and then held as slaves on the Ivory Coast, where the U.S. subsidiary of Switzerland-based Nestle and the American agricultural giant Cargill have purchased cocoa. So one of the mutual fund companies in which we invest has been working diligently to address human rights issues over the last year. And over the last year, this company has voted in favor of all 12 shareholder proposals presented to them to require companies to conduct a human rights assessment. And it also voted in favor of all 5 shareholder resolutions requesting a company to improve its human rights standards or policies. And this is aimed at eliminating practices such as sweatshops, forced labor, and child labor within the supply chain. So on your behalf, some of the companies in which we invest are actively working to address human rights concerns. For those of you invested in our select equity strategy, I wanted to provide you with 2 examples of what we call shining light companies. And these are companies that you should be proud to own. The first I want to talk about is Honeywell. You are probably familiar with Honeywell. Honeywell has been in our select equity portfolios for some time, and it's well known for its involvement in the aerospace, technology, safety, and productivity industries. Honeywell earned recognition as one of the world's most ethical companies in 2020 by Ethisphere, which is a global leader in corporate ethics and compliance. And this is the 5th time that Honeywell has received this designation. Each year, more than 500 million workers worldwide rely on Honeywell's protective equipment, detectors, scanners, and other workplace safety equipment. And Honeywell manufactures a broad range of personal protective equipment. And to address the growing demand for protective masks during the COVID-19 outbreak, Honeywell quickly ramped up production to make millions of N95 masks and other PPE at multiple production facilities around the world. And in addition, they designed operational intelligence software platform to help workers in warehouse and retail environments return to work in a safer manner during the pandemic. So they made Bluetooth-enabled sensors embedded in devices that can track social distancing and notify frontline workers when they get too close to another enabled device. And it also helps monitor when employees check in and check out of the office, and that helps organizations better manage site and equipment cleaning schedules. So they've responded quickly to develop ways to help companies wade through this COVID-19 pandemic. Additionally, around the world, Honeywell has made donations of protective masks and other PPE to hospitals and organizations battling COVID-19 in their communities. By mid-summer of 2020, Honeywell pledged or donated nearly 200,000 masks to hospitals and nonprofits worldwide. Additionally, Safe Water Network in India partnered to provide convenient and reliable access to affordable and safe drinking water in communities within India. Safe Water Network has built 180 clean drinking water stations since 2015, and these stations serve approximately 650,000 people in India in an area with acute groundwater contamination from fluoride and arsenic. Additionally, Honeywell Hometown Solutions India Foundation partnered with Seeds India to take meals and hygiene kits to families under lockdown in India. Together, they've distributed more than 3.7 million meals and 12,300 hygiene kits to families impacted by COVID-19 in 5 cities across India. And they also donated 150 air purifiers to state and local governments as they converted schools and other public facilities into makeshift medical facilities. So Honeywell is one example of a company that is trying to really do well for the communities around them and help those in poverty worldwide. The other company I want to spotlight is Norfolk Southern, which is one of the nation's premier transportation companies, known mostly for their rail transportation. Norfolk Southern was named as one of the 100 most sustainably managed companies in the world for 2020 by the Wall Street Journal. Studies show on average that trains are 3 to 4 times more efficient and produce 75% fewer greenhouse gas emissions than truck transportation. So that's one of the reasons why Norfolk Southern is one of the most sustainable companies, because they're focusing on efficient rail transportation. And their latest sustainability report noted that they've diverted 66% of their waste generated at the rail facilities from landfills. They were also recognized in 2020 for diversity, equality, and inclusion. 55% of their trainees and intern hires for 2020 were a racial minority or female. They were named as a 2020 military-friendly company, and they were also named as a top scoring company on the 2020 Disability Equality Index. Norfolk Southern has also had a great focus on community impact. In 2019, they contributed $8.7 million to support the communities that they serve, and they gave $1.2 million in matching gifts to causes selected by their employees. They provided grants to over 350 organizations, contributed to 100 public safety organizations, including police and firefighters. And they also helped 30 food banks in urban centers in Atlanta, Chicago, Pittsburgh, and rural communities in Virginia and central Pennsylvania. And I know that we have quite a few clients in central Pennsylvania. You'll be happy to know that they were recently recognized by the executive director of the Central Pennsylvania Food Bank for its long-term partnership. So I hope that by spotlighting just a few of these companies and some things that are going on in the background to really help make a more positive impact in the world, that brings you some encouragement as we round out 2020. And speaking of encouraging, the markets have been performing very well. In the month of November, the Dow Jones Industrial Average had its best month since 1987, returning 11.8%. This chart shows different asset class returns for the month of November. If you start on the left-hand side of the chart, you see that the S&P 500 index, which is a measure of the performance of large domestic stocks, returned 10.95% in the month of November. Small cap stocks returned 18.43%. International developed stocks returned 15.5%, and emerging markets returned 9.25%. So we're starting to see a rotation out of the large cap index, which has really been the area that's been leading the market higher for some time. You're starting, at least in November, to see a rotation into smaller companies as well as international companies and emerging markets as the dollar continues to decline, which is beneficial for international stocks. Commodity index returned 3.51%, and on the bond side, the domestic investment grade bond index returned 0.98%, while high yield and emerging market bonds returned approximately 4% on the month. So you may be wondering, why in the midst of this COVID pandemic and the surge that we've seen in recent weeks, as well as the climbing hospitalization rate, why are we seeing such nice returns in a month? And really, the November rally was based on a few things. You have to remember that the stock market moves in anticipation of what we expect to happen over the next 6 to 12 months. And during the month of November, we received very positive news on the vaccine front, which was really bullish for both domestic and international stocks. Additionally, the Federal Reserve continues its support, and by that I mean they continue to keep interest rates low. And that is also very supportive of the markets, because when interest rates are low, that means the return or the yield that you're getting on fixed income investments is low as well. And that makes stocks more attractive relative to bonds. And this is very, very supportive of the stock market. And the continued support of the Federal Reserve continues to make stocks very attractive from that juncture. The other thing that's been encouraging over the last month, one of the measures I look at regularly is market breadth. Market breadth is a measure of the percentage of stocks participating in the advance. And when market breadth is low, that means that only a few stocks are participating in the stock market's climb, and so the market trend is on shaky ground. Currently, market breadth across large cap, mid cap, and small cap domestic stocks is the best that we've seen in months. So we're really seeing broad participation in this stock market rally, and that is a healthy indication for markets. So what have we been doing over the last few weeks with your portfolios? Well, shortly after the election, we rebalanced all of our portfolios based on our outlook. This included carving out an allocation to alternative investments, given the outlook for low returns for fixed income over the next few years. We also tilted the portfolio toward emerging market stocks in order to gain advantage of lower valuations, higher expected growth rates, and an expected decline in the US dollar versus many emerging market currencies. For those of you with taxable accounts, we did a year-end review of your tax situation. We conducted a year-end tax review, including assessing year-end expected capital gains distribution from mutual fund companies and tax loss harvesting opportunities, and we made changes to portfolios as appropriate. As always, we continue to monitor the economy and the markets very closely, and we will make changes as warranted. We thank you for your continued confidence, and please reach out to us with any questions you may have.